Hey, this is Sasha, and thanks for joining me for another episode of Let's Talk Stocks, episode number 110, Seeing the Bigger Picture, Cause and Effect. And I think it's really important to discuss cause and effect simply because it's one of those things that really allows you to look at the markets in different ways, to see what's going to happen in the future, because market prices, investing is all about seeing the future and seeing your investments grow in the future or your projections to come to the forefront. So that's ultimately what we're going to cover in this week's episode, along with some insights about some of the election things that happened with the cause and effect mentality. We're not going to get into the political sense of things, but I'll give you some insight to the cause and effect concept that you can also use to learn from the political stance or view of things, along with some of the market insights currently. So looking at the cause and effect and the bigger picture, before we get into this, I want to remind you that all the ticker symbols, all the stocks that we discuss are strictly there for educational and informational purposes because you might be watching this video sometime in the future. And I don't personally know your risk tolerance or your style of trading or your goals in the future. So all of these things, again, are just for educational purposes. It's not any recommendation to buy or sell any stock or security. So before we move forward, just some quick news and a little bit of housekeeping. I've had great feedback from the options course. Thank you all who have already purchased the course. If you didn't get the course, you can go to rise2learn.com, and then as you scroll down, you'll see there's the Options Mastery, the second one that just came out, and there's some actual sample footage there in the video. But the course is massive, huge, world-class course, and already had some really positive feedback on that. So thank you to all who participated in that. And with that in mind, I also would like to do a few live classes and webinars added to the options course to clear up any questions or problems. So that's kind of my goal. If you want those webinars, I'm more than likely 99.9% sure I'm going to do them to answer any questions. So if you definitely want them, let me know in the comments. Just say, yeah, I'd love webinars, or yes, I'd love to have some live classes. And that'll be just probably 2 or 3, depending on how many questions we have. We'll do them at different points in time, so various people internationally can also maybe attend 1 or 2 and ask some questions. But I'll probably do that within about a month or so. And that is simply because I want to make sure you get through that course first and then get an insight to digest the information and material. And then if you have questions, that's when we can tackle those things, because it'll give you a little bit of time to really just absorb that knowledge and information a little bit. So we'll probably do that within about 30 to 50 days or so, around that time frame, and get into any questions right around December and do a few sessions there. And also thinking about other future live classes, so streaming on YouTube, Q&As. I can't do these all the time, but maybe once a month if that's something that you would be interested in, or even a live classes session, such as something like this Simple Vertical Option Retirement Strategies for Retirees. And with these live classes, what my concept or mind process is going through is, let's actually do some trades on a week-to-week basis and go through it as I would personally do it. So when we're looking at simple vertical options for retirement strategies, again, this is just a concept, but basically we do some introduction lessons here with sessions, again, live sessions that we do in webinar that we can interact, like a Skype phone call, but it would be a group, a small group. I don't like too large of a groups because then you don't feel as comfortable, but smaller groups with smaller sessions. And then what we can do is go through, I did 22 sessions here, but it would be 8 weeks, because you would maybe do week 1, you're building out your portfolio, you're putting on trades, you're putting on positions, and you do that for 2-3 days. Then, week 2, you do maybe on a Tuesday and maybe a Friday, you do portfolio reviews. And then week 3, it could be like a Monday and a Wednesday where you do portfolio reviews, and you're just letting that trade go through for those weeks and for that time period to really run through a trade on how you would actually do it. So I'm thinking about doing some different types of classes that are actually live that really go through the full trade, as far as going through for different concepts for retirement folks, people who are in their retirement, for people who want to learn technical analysis. So if these are some classes that you would be interested in, again, just let me know, because getting feedback is the best form of insight. And if you just let me know in the comments under YouTube, just say, hey, I'd love to see some classes or classes on whatever the topic is. So that would give me some further guideline of where to take some additional education levels, because I'm always looking to move things forward, to grow the process and get you to get more insight onto really how to do things. And this is, besides sitting next to me, this is probably the closest that we can get into it as far as class goes. So I think that would be really beneficial. And if you're interested in something like that, then just let me know. And finally, the last piece of insight is we're getting away and going away from DVDs and physical goods. I've been slowly moving away from that level anyway. I know that we have some military folks that are interested in DVDs and physical products, but some of these lessons are huge. They're coming out. The new ones that I'm working on are big lessons. And especially as you start looking at, some of these larger courses, the Options Mastery one that we released, it's just too large to release on DVDs or physical formats. So what we'll be doing is moving away from DVD formats. Again, I know some military folks really like the physical goods and physical copies just due to the internet issues. But with that in mind, I'm looking to build these courses out further. So we'll be doing additional modules and reworking a few courses to really do probably a few live classes with them as well. But there's some additional content that I would like to add to these courses. And the people that already have these courses, you're going to get that content absolutely free. So we're going to just add it in. It's going to go right in there. Added modules, added bonuses, absolutely free with your account. So that's what we're going to do. That's all the news that I have so far. So again, if you're interested in live classes, let me know and just make a comment and let me know which type of classes or what kind of classes that you would be interested in. So that's kind of where I'm looking to move things along. These things take time. DVDs are phasing out. All these things take time to kind of slowly move away from that. Same thing with the classes. It takes time to learn what's going on with the webinar software, the platform, how to really choose the right one and record those things. So all these things are part of that cause and effect principles and concepts that we're going to get into right now. All right, so as we look at cause and effect, ultimately cause and effect is what you're looking for to see the future prices. Because in markets, you're looking to understand future price behavior. If you don't know what's going to happen in the future or can't project what's going to happen in the future, you can't really trade. You can't really put on a position, because when you get into a stock, whatever stock it is, Apple, Netflix, Google, you're looking for, okay, I believe in this company because I'm projecting that they got the new phone coming out, they have this happening, so the earnings are going to increase, the stock price is going to increase, and therefore when you purchase those shares, the company, invest in the company, you're going to make more money. So it comes down to cause and effect, understanding that cause and effect. If you don't know cause and effect in the markets, if you don't know cause and effect in general, and you can't see it, then it's going to be very difficult for you to be a trader and investor. Of course, we are wrong at times. We are wrong as traders. You're going to be wrong. But admitting those things and making changes to those things very quickly is going to be a lifesaver for you. So cause and effect is big. And in the market, as we look at the market, the biggest cause and effect on a simplistic view and a simplistic fashion is it comes down to volume and price. That is the simplest approach that I could give you. So if we take a look here on this stock chart right here, this is Amazon. If you look at the volume right here, this is the cause, and you get the resulting effect. Okay? Cause, volume, effect. Okay? Price. Now, when we look at this, okay, these causes and effects, we're looking at a one-to-one relationship, and this is not always the case. Okay? One-to-one relationship is what most people think about, and it's a good starting point. It's a good starting point if you're just getting started on a cause and effect basis, especially if you're younger, if you're in high school. I don't know what age bracket you are in watching or learning from these videos. Oftentimes, the older you get, the more aware you get and the bigger you can see this. But I've also seen other people who are 40, 50, 70 years old still don't get this concept. So it's not really about age. It's really just about seeing the bigger picture. So when you look at these prices and you start evaluating these things, there's multiple causes and effects, right, to that effect. And, looking at Amazon right here, we have a ticker. Let's see, it's over here. Major drop. Why could this be happening? Well, we know the volume is pretty big, right? The volume is big. That is the one-to-one relationship. But other factors, other causes could also play a role. For example, Trump talked about speaking about Amazon and Jeff Bezos. They have some issues and some tension there, taxing them and so on a little bit more. So that could be another cause. Okay, so there's other deeper factors. So you seeing these things is going to allow you to really see the bigger picture. It's going to allow you to predict future prices and be a little bit more on the right side of the trade more often than not and see the statistical chance and probability, because it really comes down to seeing things within numbers, your chances, your probabilities of success when it comes to trading. So with that concept in mind, let's move forward and let's take a look at a few various issues in regular life, because those things actually you can probably understand a little bit better, because if you don't understand the stock market world or stock market terms, it's very difficult to apply that to cause and effect. So let's look at real world situations and real world concepts first. And I want you to take an open mind first in these concepts that I share with you, and then we'll apply those to the stock market, to the stock charts. And hopefully that gives you a bigger insight. All right, so the first example is driving 60 miles per hour in a 30-mile-an-hour zone. Okay, we have a cause of driving 60 miles an hour. The effect could be a child at risk getting hit. Now, there's multiple effects here that could play in. Most people, again, they think of it as a one-to-one relationship. They will think, well, I'm a great driver. It's not going to happen. So the cause and effect modal does not apply. Okay, other people look at this, okay, and say, well, your statistical chance starts to increase if you're driving 60 miles per hour in a 30-mile-an-hour zone with a child at risk getting hit as there's more children, or as you're in a residential zone, or as you're going during the peak hours when children are outside and playing, maybe before dinner and so forth. So as this happens, as these things stack up, the cause and effect also starts to change, okay? Now the effect could be different. You might be looking at this effect and saying, okay, I might be hitting a child, or I have a higher chance of risk of getting a child hit. And the other part of it is saying, well, but I get to work faster. But my effect is if I drive 60 miles an hour, if I look at it from just my point of view, I'm driving really fast through this 30-mile-an-hour zone. For me, I get to work faster. For me, I get to the store faster. For me, I save time. Again, thinking about me, right? I'm thinking about me. This is the way we normally think as humans. It's all self-thought. We're good. We're a good driver. That's the thinking. That's the mindset. However, that's one effect, the effect of you getting to work faster. The second effect is child getting at risk getting hit by a car. So there's different effects that could happen. Of course, there's completely other effects that could happen. You could hit a bump, a post, and kill yourself. That's another option or something that could happen. Who knows what can happen, right? But as you're driving faster, say 95 miles an hour, 150 miles an hour, the statistical chance, the probability, the effect of something happening that's different than what you personally expect starts to change. So I hope you're starting to see things, as you start evolving into things. Constantly being a new adopter, like a Samsung phone. If you start looking at, you're being a constant new adopter of different things, technologies. For me personally, I don't know if you know, I typically adopt things about a year or so after things are released. So I don't usually have the newest gadgets. That's just not my style. I like stability. I don't usually have the newest car because, again, you have all these recalls, problems, headaches. Then you got the phone, you got to send it in. It's just a lot of headaches for me. That's not what I want. But you have different effects that come into play. Number one, if you're constantly a new adopter, you're going to have the newest technology. You're going to have the faster phone. You're going to probably get the newest technology to experience that newest technology and get those benefits. On the flip side, if you were the one who had the Samsung phone, you're also going to be the first one who's going to have a phone problem, and then you have to go get it. Even if it's not a fire issue, you have to go return it, exchange it, find a new phone, So all those things also happen. So again, the trade-off is different depending on your mindset. Okay, simple concept, right? So as we go to the next thing, the pro-life, pro-choice argument. Okay, we've had this presidential election. I'll give it to you the way I look at things. Again, doesn't matter what your viewpoints are, but the cause and effect mentality, right? So when you look at people who are pro-life, they're looking to save a life, the child's of a life. They don't believe in abortion. And this, of course, is a very sensitive topic. So I'm not pushing one view or another. But what I'm saying is that if you're pro-life, you're looking to save that life of a child. You don't want somebody's life to be gone bad. You know, you don't want them to die. You want the world to continue evolving, which is a good positive mindset. On the other hand, you also have pro-choice. Also another good positive mindset where you want people to choose. You want people to choose that if their health is in trouble, you want that choice to be able to get an abortion. Now, the problem here, of course, is as you look at this as a cause and effect mentality, pro-choice allows people to make a choice. Pro-life forces people to continue through a pregnancy. If right now, since we are in a pro-choice environment and state, you have a choice, so you're familiar with that. With pro-life, the cause and effect that I see, this is again just my personal viewpoint, what typically happens in a pro-life situation, or what would happen, is oftentimes it's the poor who would be affected. So basically the services would be cut off. Usually the way that this happens is, they actually just kind of revoke things. The government, they slowly start revoking social services from the abortions. Not right away that they totally annihilate and say, okay, well, you can't have abortions. It's more along the lines of, we're going to reduce funding for hospitals for the abortions. We're going to reduce practice insurance for abortions and things like that. So all those things slowly start to get away. And then what typically happens is that all these services are gone, and usually the poor are the ones who are stuck with bearing the child. They're the ones who won't have the services. There's usually, they're the ones that are going to have to get and have that child, even if it's against their health, even if it's against their body or their wishes. So whatever it is, they're the ones that are going to have that burden. Typically, the rich or people who are well off, what usually happens in that situation, if the government took control and said, okay, we're now pro-life. Now what typically will happen is if you're rich, if you're wealthy, even a little upper middle class, if your health was in trouble on a pregnancy and you're, let's say, 3 months into the pregnancy, your health was in trouble and you're a woman, what's going to happen is those people who are able to afford it, and if their health is in trouble and they want to make that choice to be able to have an abortion, they're going to fly to another country and take care of it. And that's just usually the way the world works, because you have cause and effect on both sides. So having that burden, if you're rich, you have that flexibility. If you're poor, you're actually going to get that burden of following through and continuing with the laws at hand. Again, not talking one way or another is better, simply just stating my cause and effect and what I see in the future as one thing happens or one thing changes. If you look at gay marriage, the same thing. There's a lot of people who are against it, a lot of people who are for it. For me personally, I look at it fine. If you want to get married gay, by all means, get married gay. Not a big deal to me. If you don't want to marry gay, then don't marry gay. Pretty simple concept, right? But as you start getting into third-party candidates and you start looking and evaluating these things, again, we're talking just a few politic things simply because it's recent. But when you get into third-party candidates, you start looking, okay, well, a lot of people will look at this in a different way. They say, okay, well, for me, my mindset is that, well, this is actually a better choice. I'm going to write it in. And that, again, emotionally is a good thing. If that's what you want to do, by all means, hop at it. Other people will look at it completely different. They'll look at it and say, there's no chance of winning, for that candidate. So I'm going to write in this person or that person. So again, you look at it in multiple ways and multiple fashions as you start looking through these things. But what does this really imply in the future? This is ultimately what we want to get to. So I want to share one more thing, and that is the taxes with the new presidents. By the way, these are some insights I got from my accountant. So it'll give you some insight to what's going to happen to your taxes, cause and effect again. So here was something that I posted right from my Facebook page. Basically, there's some insights and notes directly from my account. So this is what's basically going to happen if things are going to play out the way that they should. Again, cause and effect lesson, right? So think about this in terms of a cause and effect mindset that we'll get into a little more here. Okay, so basically this post is not designed for political discussion, blah, blah, blah. These are her words. If you own a small business, S Corp, or partnership and enjoy a special tax treatment, meaning no double taxation, that privilege will be gone. Please expect your taxes to go up at least 15%, maybe more. So again, if you own a business, probably a smaller business, it's going to go up maybe a little bit more. If you are rich, congratulations and good for you, you will be richer. So the highest tax rate will be reduced to 33% instead of 39.6%, okay, benefiting the rich, obviously. If you die rich, leaving behind over $5.43 million, your family will pay no tax. Congrats again, rich people. Well done. If you are poor, brace yourself. You will be more poor because your tax rate will increase via changes towards the standard deductions. Now, of course, these are what-if modalities, and if things play out based on the policies that they're looking to do, this is what's going to happen. So we have cause and effect in two ways here, right? So the cause, Donald Trump, and if he continues to pull these things through and move them forward, the end result, the effect, you have two effects here. Okay, so my goal here, my point for you is to see that you have two effects, not just one. You have two effects. And most people, they look at it just as a one effect. So you have two effects. First effect, first main effect, big effect. So the first effect is you have the rich that are affected. The rich become richer, okay? The second effect is that the poor become poorer. So ultimately, you have both of these things that'll play in your taxes as far as from that initial cost. So this is what's going to happen more than likely if most of these rules and laws are going to come into play. This is ultimately what's going to happen. So the rich will get richer, the poor will get poorer. If you're an investor in the stock market, congratulations, because typically people who are investing in the stock market have more money. If you're a regular person that is just getting started in investing, it may help you out a little bit when you're getting started, but unfortunately you're going to take that cut and you're going to pay more on your personal taxes. So trade-off really depends on your own personal situation. All right, so the final point really is, what does this tell you about humans between the market's cause and effect, the driving 60 miles an hour, constantly being a new adopter, pro-life, pro-choice, gay marriage, third-party candidate, taxes with the new president? What does this tell you about humans? And I want to share with you one more insight from a public comment that I had earlier this week, just so you get some more clues, because I don't want to reveal the answer just yet. All right, so here's some insights from that trader. So if you go ahead and read just the first couple lines. Okay, Sasha, I know you read these comments, so I must tell you. When you said hold on to a stock for a year to get a feel of it, I kind of laughed inside my head. But after losing a fair amount of money, I think one needs to be mentally prepared to let one's money's float in the market. So in either case, if you just read that first beginning concept, it starts to give you more insight. So what does this ultimately tell you about humans? To me, it tells me this, that we always think we are better than we truly are. And that's really the base concept, is that if you always think you are better, if you think you're a better trader, if you think you know more, it's going to be a real problem in trading. Real problem. Because when you think you're better than you are, you're going to be driving 150 miles an hour in that 30 mile an hour zone. You're going to give a kid, let's say 16-year-old kid, a Ferrari to drive 120 miles an hour. And if you tell him, drive 120 miles an hour, no problem, it's probably a dangerous recipe for disaster. Cause and effect, right? But we humans, we always think we're better. Why do you think a lot of teenagers get into car accidents? They think they're better drivers. They think they know more, but they don't have that experience yet. So in the market, the same takes place. When you're a trader, when you're trading stocks, if you're just getting started and you're trading 5,000 shares, probably shouldn't be doing that if you only have $1,000 and you're trying to trade the bigger cap stocks. You think you're better than you are, but it's wrong. You're wrong. You're thinking about it incorrectly. You have to look at it and see, what is it that I'm doing wrong? And when I shifted this mindset, and when I started to always think, What am I doing wrong? How can I improve? I'm probably horrible at this. So every time I take a trade, I'm thinking a few things. And I've talked about this before, but basically, I'm always looking at what if it goes against me? That's what my thought process is. It's not about the future of how much money I can make. It's always, what if this goes against me? What if I'm wrong? I'm probably wrong most of the time. If I think about it this way, I actually become right more of the time. It's a weird way that that works because it allows you to see the bigger picture. It allows you to really see the investments in a different way. And when you start being open-minded about these things, about seeing, okay, the effect of both sides, not just one side. When you're driving really fast, yes, you have the effect of getting to work faster, but you also have the effect that could kill a child who's playing outside. So you have these kinds of things that you have to deal with on an effect basis. And in the market, the same comes into play. When the market's too far extended, we had a certain cause, whatever the cause is. When the market's too far extended, more than likely it's going to pull back, right? The effect is going to come back because we're too far extended from whatever the cause was. When you start looking at things this way, it'll really open up your trading world. It's going to really open up your investing world. It's going to look at things, statistical probabilities. Because if you start looking at things by the numbers, by the way things really work, for example, third-party candidates, statistically, right, with Gary Johnson, Jill Stein, they have 2% chance of winning the presidential election. So more than likely, voting for Trump or Clinton was the way to go. Statistical probability states that way, right? They were going to be the winners. Now, on the polls, they said Clinton would win, but again, you can see statistics don't always play, they're not always correct. So just like you can still play statistics in the market, but you're not always going to be correct. So as you start looking at these things, as a trader, you're always looking at the numbers, the effect that can happen. For many people, however, it is very difficult. So how do you overcome this? How do you really see the bigger picture? How do you see the cause and effect? How do you predict future stock prices? Well, I gotta say, it's really difficult. It's probably the biggest pain you're gonna endure because you have to look at yourself and say, I'm wrong, or I'm probably dumb, or I just don't see things correctly. And that's a really tough thing for many humans to say. That's not a thing that emotionally we like to do. But in trading, I gotta tell you, you gotta do this. You gotta look at yourself differently and say, I'm probably an idiot right now and, doing this trade. So how can I be a better, safer trader on this position? Or I'm probably going to be and have a mistake on this trade right here that I'm putting on. So how do I be a little safer on it? I'm probably not as good as I think when I'm putting on these 500 shares or 100 shares. How do I be a little bit safer? Or what if this goes against me? When you start thinking like that, it's slowly going to allow you to see things a little bit differently. So self-awareness is key. Self-awareness in day-to-day life, day-to-day world, seeing yourself the way that you drive, the way that you act, the way that you behave, your mindset, the way you interact with friends, just the way that you've spoken in the last 5 minutes, let's say, as you're at a restaurant to the waitress. Were you kind? Were you humble? Were you a little mean? Were you a little aggressive? Seeing these things are very minimal. But being more self-aware in the market, when you're looking at a bigger market scope, it's a little bit easier because it's a global view. A lot of times there's a lot more things in play. So sometimes it's a little bit easier, but seeing yourself first, especially when it comes to driving, when it comes to purchasing products, spending money on your credit card, those things, if you can do it, that's a step up. Self-awareness, that's the first step. You got to really admit your faults. I mean, that's kind of another concept is, okay, where are you bad? Where are you lacking? And this is part of trading. What areas are you struggling with? Because that's ultimately what you need to do and what you got to fix. And of course, saying that you're wrong. So your goal is to really trick your mentality, trick your mind, psychologically trick yourself to go against yourself. And I know it's a weird thing because there's a lot of motivational books that say, you got to believe in yourself, you got to go after yourself. But if you're just getting started, you need to be a little more humble about how good you are in this business. You need to be a little more humble, drive a little slower in this business. And that's ultimately going to allow you to see this bigger picture. It's going to allow you to see the possibilities of the effect of stock prices, the effect of the future. and be more statistically right on the proper side of the trade. So as we move forward and look at the market environments, cause and effects on the markets, let's just do a rundown. So in episode number 109, I talked about policies, expecting that with a Trump victory, I would see the market sell off. And in general, if you look at the futures, here's a screenshot that I did. You can see in the futures, this was 11:31 p.m. Eastern time. S&P was down 96 points and the Dow was down about 700 points. So in theory, the concept I could say was right. On the bigger scope, also, I was wrong. Looking at it, for me, I'm not scared to say, okay, I was wrong for the next day. But on the futures, I could say, okay, well, these things were right. So the fact is the fact. This is what happened. So if you look at the markets today, as I look over, we had one day kind of rally, one day kind of isolation. So, those things, one day could be just a euphoric state. I don't look at one day as being a trend. This is just, could be some things that are just playing out based on trades, based on the 9-day sell-off that we had. It's just one day, right? I look at usually the bigger scope. But in either case, on one hand, this was correct. The sell-off was pretty large and significant, right around the 5% mark that we estimated. Did I know there was going to be buyers in the futures so heavily? No, I did not, because I still expected for the day to sell off rather than just the futures. So futures sold off, but for the day I was incorrect. So those things will happen at times. And as a trader, you have to manage those risks, manage those statistical probabilities and the chances and choices that'll happen. Oftentimes, again, for me, 1 day, 2 days, even a week, not always a trend, but 1 to 2 days, definitely not a trend. Usually with a stock, I'm looking for a second or third day follow through to really convince me on that stock, whether it's to the downside, whether it's to the upside. So now, what does this happen to the market? With Trump being in president, what's really going to happen? What do I see as the effect, and what are some things that are happening? Well, basically, financials will benefit. The banks, the finances, because he's looking to raise interest rates in the future, so they're going to make more money. So the financials will benefit. Again, we also have fiscal dominance, which means fiscal means spending money, right? Spending, budgeting money. So budgeting your checkbook, right? So that's fiscal dominance rather than monetary is controlling of the interest rates and so things of the dollar. That's monetary policy. But fiscal dominance is really about spending money. So Trump wants to spend more money to get the economy rolling, to get more jobs. That's kind of what he's looking to do, or at least what he said. Whether he does it or not, that's a different story. Again, these are cause and effect things that we're looking at. So fiscal dominance, spending more money is what we're looking at, which also means that inflation, in theory, creeps up, which means higher increases in prices and goods. Okay, so your box of cereal that you used to get that was this big now starts to compress to smaller things. That's what inflation is, right? Or bananas, if they're 45 cents a pound, they're going to be, let's say, 65 cents a pound. So that's just basically inflation. That's just the way it works. Now, Greenspan today stated that stagflation could happen here coming up in the future. He didn't say that it's directly related to Trump, but he said stagflation is what he's seeing or could happen here in the near future, which basically means higher inflation, which means prices of goods will increase, higher unemployment, which means more people have less jobs, and slower demand spending, which basically means people will spend less. So these things is what he's watching for. But why does the market move higher? Well, in general, it's because it's the central banker's dream. Central bankers' dream. More spending money. It's the banker's dream. You got to remember, the market, when you look at the market, it is set up for the rich. It is set up for the wealthy. It is set up for big businesses. And with Trump being in favor for big businesses, the market, obviously, if you look at the S&P, the last couple days there, part of it was due to Hillary potentially winning, but then the next day the market rolled higher. Again, it's just 1 day still. It's just 1 day. But the market still rolled higher. Now we're getting into a little bit higher levels right here, almost at all-time highs. In that case, people start looking at evaluations. They look at valuations of, is it really worth that much? But, when you spend more, the central bankers love it. They love spending more money because they're the ones that are going to win out. Remember, this business, the business of trading stocks, is set up for businesses. It's set up for the big businesses. It's set up for these high net worth individuals. If you're a little person, if you're a person that's just getting started in the market, remember, the market's against you. It's set up to take your money, not make you money. It's set up to take your money. And when it's set up like that, that's why it's against most people. Now, can you do well in the market? You can. The odds are stacked against you, but you can do well. So long as you understand what you're doing, so long as you understand investing. But you need to put a lot of time, effort, energy, see the cause and effect, and see what's going on and what's happening. So when we had the futures that were completely down, Carl Icahn comes out, he says, I bought more into the future, in the futures, and obviously market skyrocketed, and then he took some profits off, and that's what they're doing. They're taking now some money off, so it'll come back here. Again, just 1 or 2 days. So what could happen in the future? Well, could we break out to all-time highs? As I start looking at this, logically and statistically, right, if we start looking at these things, we start looking at, driving 100 miles an hour, 500 miles an hour, you think the market's going to get to 3,000? I don't know. How about 5,000? I don't know. I don't think so. Statistical probability to me tells me probably not, especially if you're looking at 5,000. Most people would say probably it's not going to get there within the next year, right? If it starts moving and like a rocket ship, the statistics are against you. So that's why I look at it. I start looking at these numbers and I start compressing them, right? So could the market, here's what I do. On a baseline simplistic level, here's what I do. I compress this. Let's compress it for you so you could see it visually. Okay, so now we're looking at the market. You think the market in the next year will get to 4,000, or you think it'll drop to 1,000? What's more likely? Okay, so here we have to double and here we have to cut in half. What is more likely? To me, I'd say it's more likely to get to 1,000. Could we get to 4,000? We could, but I say it's less likely than getting to 1,000. Now, what if I drop this down to moving 1,000 in either direction? Basically, you move up to 3,000 or you go down to 1,000. 2,156 is where we're at. I'd say half and half, right? It's a little more even now because the chance, right? Because here it has to move 2,000. And remember, pushing something to the upside, just like a boulder, a rock, a car, you're pushing it. Pushing something higher, you have to push money into the system, is always a lot harder. Whereas selling off, sell-offs are a lot faster than stocks sell off faster than they go up because of emotions, because of fear. So I would say that it's a lot easier to hit 1,000 than 4,000. So you start compressing this, right? So now you go 3,000, 1,000. So okay, which one's more likely? Still say 1,000. I'd say it's a little more even, but I'd still say 1,000. So as you start compressing this further, you start looking at different numbers. You start playing with it, with the projections. For me, as far as what do I think is going to happen, I think we could pump and inflate the economy much more. So again, people talk about it. There's two approaches, right? Always two potential effects, as I mentioned earlier, or if not even more. But remember what happens. Market doesn't go straight up. You got a period of upward trend, you got massive collapse. You got upward trend right here, you get massive collapse. We're at an upward trend right here. We didn't get that collapse yet. We got a little pullback. So now with the new president, more spending, could we go 2-3 years, another leg higher? Absolutely, no question about it. Could it happen for the 4 years of his term? Absolutely, no question about it. So we could go into 2020, up to, if you look at the projections, let's see, here to here is about 4 years, I'd say. So let's go from here to here, 3-4 years. So I'm just drawing this line. Let's delete a couple of these, delete drawings. So now here's our 4-year line right there. So if we just take this and just kind of put it right around that level, you can get to about 2,800 in 4 years. I'd say that's fair thought process. So as I start zooming things in, we're at 28, almost 3,000. The market likes to overinflate, right? Rubber band effect. So if we get to 3,000 right here, more than likely we're going to have a pullback. Because think about it. We go higher, we pull back. We go higher, we pull back. And this is just part of the process. This is what happens. So again, stagflation, from what Greenspan said, we could get into these levels. Central bankers love it. You know how the market gets manipulated through central bankers, right? They pump it higher. That's what happens. So they push it higher, and then what do you get? Well, obviously unemployment increases, so more people actually will have less jobs, okay? Then it starts to come back, and you get this period of retracement. How big? I don't know. I don't know. You know, you look at the projections and you take a guess statistically. What is the chance, right? Depending on how far extended it goes. You look at the chance, just like we talked about, the chance. The faster you're driving, the bigger the chance in one way or the other. So here, the same thing. I'm looking at the chance that could it come back over into this level? Absolutely. Could it be, if it's a little higher, could it be just a half pullback? Could it be just to the 2000s? Yeah, because if you're at 3000, you get a pullback to 2000. Yeah, it could happen. But you know, this is what happens. This is the way the world works. So now if we pump it a little higher, you're going to get that, you know, drop. I still expected a drop, whether Trump or Clinton got elected. Obviously, I was wrong on that for the next day. But could this start to unfold over the next course of a week? It could. I don't think it would happen, because if it did, it would have happened the first or second day. So now what I'm looking for is a 3 to 4 year term of this happening in the future. Right now, the market will be manipulated, from my view, over the next 3 to 4 years. The market will be manipulated. It'll be happy in the sense of great for big businesses in certain sectors, really bad for a basic general investor, you know, for people who are poor, unwealthy, people who don't have a lot of money. If you're making less than $140,000 a year, more than likely, you know, you're going to be paying more money, and that's unfortunate. For those people. If you're really wealthy, if you're making over $140,000 a year, you're going to see great tax cuts. You're going to see a lot of benefits. Probably the market will rise, but after that 3 to 4 year period, the effect of that, what's usually going to happen is you'll still get a pullback, because unemployment slowly will start to creep up and rise, because in part, well, taxes are going to get more expensive for the lower class, or for the people who make less money. So as that increases, they're going to pay more. They're not going to have as much money to spend. Eventually, this is just the cycle. This is the effect that happens. So anyways, could the economy completely change with Trump? It could, who knows? But we'll see what happens. Is statistically and probabilities, you know, this is what I look at. This is how I think about things. And I hope this gives you some insight to thinking about cause and effect in various ways, because the lesson really wasn't about politics. If you're commenting to me about politics within the discussion, within the comments, then I know you're still trading emotionally. I know you're too emotionally attached to one candidate or the other. For me personally, I'm always looking at the numbers. I'm looking at the chance. What's the cause and effect? This is what allows me to see the bigger picture. And when I used to trade emotionally, when I used to defend positions, when I used to defend a candidate, these kinds of things, you know, so if you're looking at it that way, then you're still trading emotionally. And more than likely, you know, my prediction is you're probably not successful. So start looking at things in the sense of a number. Start looking at things, the probabilities, looking at things in a cause and effect. If you can do that, you're going to do really well in this business. But it's about being open-minded, about seeing the bigger picture. What's going to happen? Next step, seeing things unfold. And what can you project from a stock, projection from a shorter term view, or a longer term view, as what I just expressed right here. Shorter term view, we had the pop. Longer term view, what do we have? Depending again on your investment situation. So I hope that was helpful. Might have been a little difficult if you're internally saying, oh, I'm fighting this, you know, I'm better than this, you know, but open up your mind. If you're not successful, be open to this. Think about it. Think about other factors, maybe things you are less emotionally tied and how they work, how they project, what happens in the future, the step-by-step concept, how things snowball. That's what it's about. It's about seeing that bigger picture and seeing what will happen. All right, so thanks for sticking with me in this lesson. If you like this lesson, you want to see other lessons like this one, you want to get insight to the things I'm working on, the things I'm looking to do in the future, get insights on those webinars, sign up to the newsletter list right above here, above my head, and enter your name and email address when you get to that page. But if you want to continue watching other videos, seeing other free training lessons, then you can continue to hang out on YouTube and click the thumbnail over in that area. All right, thanks again. Remember, in the end, do what you love, contribute to the other people around you, but most importantly, live life abundantly. I'll see you next time.